Welcome back. Today we have to talk about Clover Health. I am gradually adding more and more to this position, and blood is out on the streets on this stock. Over the past month, it's down 41%. What a move. And this isn't limited to just Clover Health. Other meme stocks are down as well. I mean, today they're just a move of negative 5% on GameStop, but over the past month it's down 28%. You look at AMC, it's actually up on the day, but over the past month it's down 41%. CCIV, this is a SPAC, popular SPAC play that's merging with Lucid. This is down, well, it's up 1% over the past month, past 5 days, down 9%. This has seen an incredibly volatile ride, all the way from over $60 back down to earth, $23. This was a play that I made a shit ton of money on. And what I'm trying to say to you is that volatility can be your friend. Okay, this is more speculation than long-term investment, but right now I think a lot of money can be made from Clover Health investments. So welcome back to the video. My name is Adam. On this channel, we talk about finances, stocks, saving money, and cryptocurrencies and my investment portfolio. And I played Clover Health quite well. If you just look over the past 6 months, I bought in around when it was $8 and I followed through, kept buying more shares until it was under $7 a share. And then it absolutely skyrocketed up by 200%. I made quite a nice profit. And then it continually just fell down from there. It's down 63% again since it reached its highs of $28. And now I continue to buy shares, more and more shares now, and I'll continue to buy shares until it reaches its bottom. Well, we're going to take a look at the chart, and I mean, a pretty good resistance level is around the $7 range. So it might reach $7, and if it does, I'll just keep loading the boat, because the short squeeze has not happened yet, in my opinion, and this is such a good opportunity to make a lot of money, especially if you missed the first time around, okay? But again, the main thing is when there's blood on the streets, that's when you want to buy good long-term growth companies like Clover. And Clover Health, the short interest in Clover has skyrocketed relative to AMC and GME. This is just by the Motley Fool, comparing the change in shares outstanding since February, especially since the short report from Hindenburg came out. And Clover Health is a SPAC backed by Kamoth, and he's known as sort of the king of SPACs, and a lot of hate has been upon him recently, and I don't know if it's warranted or not, but I think Clover Health is a solid company. It has 20% revenue growth year over year, and 30% revenue growth preparing to be for 2022, and it's still not making any profit. However, I think long term that is not necessarily a concern for Clover Health, and short term I think we can see a pretty big major short squeeze, but if that doesn't pan out, I still think it's a pretty good long-term company. I think part of this news of Clover Health, why it's dropping by so much, by like close to 7% today, is because the chief financial officer stepped down, not for any red flag type reasons. So that may actually affect the stock price, and maybe that's why it's down by now, yeah, it looks like 7%. Clover Health used to be up there, but now Clover Health is actually down, saying that it's 27% short interest. It used to be like 36% short interest. So it looks like some shorts covered their short interest shares over the past couple of days and weeks. Who knows if this is accurate? There's a lot of talk going over like dark pools and naked shorting, which is illegal to say the least. So yeah, we'll see what happens. And I mean, I've seen this time and time again on the message boards. A lot of people, when the stock is doing well, they're like, when the stock was at close to $30, it was like, oh, like this is going to go to $100. The squeeze hasn't happened yet. Everyone was super, super optimistic. And now people here are bashing the stock, saying how much money they lost, saying that it's going to go under $4 a share. that they'll buy it when it's at $2 a share and so forth. And like the same pattern plays out time and time again. And it's just so predictable. It's just like market psychology right here. A lot of people are angry, they're fearful when the stock is in the red. They don't want to buy. All they want to do is sell. They feel like the hedge funds won, all that. But now is the time to hold and buy, in my opinion, okay? Not when it's at $28, not when it's at, $30, but when it's, when blood is on the streets, okay? That's when you want to be greedy. So that's just my advice. Of course, don't listen to me. I'm just a guy on the internet just talking about stocks. So do your own due diligence, but it has worked for me in the past. And if you want to see my real-time buys and sells, feel free to check out the Patreon link down below, and we'll get you sorted out with that. But yeah, again, this is still a solid company. 20% revenue growth in 2021. Expected 30% revenue growth in 2022, especially if the Democrats come out with their $1 trillion plus stimulus package for Medicare and expanding health aid in the US. This should be a pretty big move for Clover Health. The only concerning thing is profitability. They're not profitable yet. However, I think that they will become profitable. They're expected to become profitable in 2023. And a lot of that will have to do, of course, with how well they're able to increase their margins, decrease their operating expenses and basically their top line, so that more of that can transfer into actual profitability. But yeah, as of right now, they are not a profitable company. I am optimistic for the future. And if we're looking at the stock price, right now we can see it is a pretty good time to buy if you're just looking at the Bollinger Bands. I really like to look at the Bollinger Bands. And if you see that the stock is riding the lower Bollinger Band, I mean, most likely it will continue to ride down. But one catalyst could easily push the stock price up, as we've seen here before, okay? So it went all the way from, this was like $11 a share right here, all the way down. At the bottom, it was just under $7. It was like $6.60. And then it sort of, there was one green candle. So you might want to wait for a green candle right here before buying in Clover Health. But my strategy is you never know when that's going to be, and it could pump up anytime. So it's good just to buy and then average down from there. So I started buying when it was at $9 a share, and I'm continually buying more. And I will continue to buy more if it goes to $7, $6, $5, wherever. I'm in this stock. And then so it reached $6.60, which will be one threshold. We'll see if it breaks below that, but that's where I see a resistance occurring right here. I guess like a support level at around the $6.60 range before potentially going back up. But yeah, this pattern, we know that has happened before. It could 100% happen again. And look where the stock went. In the span of a couple days, it went from $6 being a $6 chuck to being like $28.80, close to $30. So like what a ride, right? So I think the selling pressure will definitely ease. I don't think the short squeeze is over yet. I think it could be an incredible time to buy the stock for a short-term hold if this thing skyrockets as a more speculative play, or potentially even as a long-term hold. You will get rewarded. And just know that $10 is a pre-SPAC price. So if you're looking at the 1-year chart, this was a $10 stock, and now it's selling at about like a 20% discount to the pre-IPO or pre-SPAC offering. And again, a lot of these SPACs aren't popular, but at least right now. But I mean, I like to buy when stocks are not popular and sell when stocks are popular. And I think that's how you make the most amount of money. And one other thing to keep in note is that a lot of these investors that have been making tremendous gains on Clover Health and other type retail stocks backed by Wall Street bets have been making a lot of money lately. And, as they make more money, they can margin out the money that they made. So they're basically borrowing money to buy more shares, and they keep doing that until things go sour in the market. And all of a sudden, they need to sell their stocks just to meet their margin requirements, because the stock value goes down and down and down. And that just ends up happening to, like, en masse, on a very large scale. And so this also might be why we're seeing a lot of red in the stock market lately, especially with retail stocks. And you wouldn't notice it if you're just looking at the S&P, which is reaching like all-time highs, right? So, like these are down by 40% over the past month. Over the past month, the S&P 500 is up 2%. So just, it just shows that S&P is fine. But a lot of these retail stocks are getting hit really, really, really hard. So yeah, that's it for me. Let me know what you think about this video. I'd appreciate a thumbs up if you enjoyed it, as well as subscribe if you haven't already, for more content like this, as well as my market moves. And love you all. I'll see you in the next one.